Well, it looks like the dollar index may be breaking downward. We will look deeper at that. Now, what in the world does that have to do with crypto? Frankly, everything. We'll also look at some altcoins used today, and we'll explain what does the dollar index having a breaking down have to do with crypto. Welcome to the Crypto Rain channel. I'm your host, Jay Rain. If you like money in crypto and you're looking for a seasoned investor's take on the crypto market, join the Rainmaker family. Do note, I'm not a financial advisor. I'm a crypto investor myself. We do want to thank our Patreon members. We do have a private Discord that our Patreon members get access to. We also have a strategic relationship with our partner Wanchain, and we want to thank them. This does allow us to give away on our Friday live stream some WAN to all our viewers. So that's been a lot of fun. All right, let's welcome Paul from Definity, who's joining us for a deeper look at what is going on in the global markets, as well as how that might impact crypto and the stocks, as well as we'll look at some charts on viewer picks.
Yeah, great to be here as always. It's one of those weeks where it's actually kind of nice to be looking at an equity rally, a decent risk-on move, no sort of doldrums about interest rate rises and things like that. And the move that we were looking at, the short-term move, certainly that we were discussing last week in crypto, if it doesn't go down, it's going to go up, seems to be playing out. There's some strategic factors that we were just discussing off air just before we came on about how the UK has got Rishi Sunak as prime minister, and he's very pro crypto. He's also ex Goldman Sachs. He's going to be pro the markets, pro risk, which is going to give, as we were, Jay and I were talking about, if the UK tries to make a grab for crypto, it might make the US think twice and actually sort of up their game in terms of competition, which I think is setting the seeds up for a bull market, a major bull market. So I think in the short term, we've got to play it one step at a time. But last week we were looking at the potential for a rally in the most sensitive of all of the markets out there, which is the equity markets. Equity markets tend to move first, then everything tends to follow. And we were looking at this double bottom potential in the Dow, and it was off the back of this spike pattern, which was after the CPI number. Remember, we were talking about, everyone's talking about inflation, right? Inflation. It's a big problem. The Fed have to step in. They've got to raise interest rates, and they've been yanking up interest rates at such a fast rate, and everyone's saying the property market's going to crash. Well, the property market isn't going to crash. The property market is going to adjust. And if inflation is in the system, they like a bit of inflation. They're just trying to tame it. So they're telling the markets that they're going to raise interest rates going out and getting them used to the fact that this is what normalization feels like. And we will reach a point, which we're reaching now, I think, where they won't be raising much more and they'll let the market stabilize. So this whole correction here is all about the market getting used to the fact that interest rates aren't going to be as low as they were, but moving forward, they will start to get used to that. And as long as property yields are high enough to warrant them making money by investing in them, the equity markets are going to find that in favor. And if they can't do that, then there will be more adjustments by central banks to allow money to go into the system to prop the market up and make it go higher. So all of this is a risk-on scenario. And as was said at the top of the show, the effect of that has been to weaken this dollar. So why are we looking at the dollar? The dollar is the reserve country of the world, and it's been extremely strong, massively strong, which has been impacting US corporations who are trying to export their goods across the world, finding it harder because they're getting less money back in their dollars than they are from their currency transactions. So if you think about Apple, for example, and all the countries it's selling its goods into, it's a massive problem unless they've hedged. And yeah, they will do some of it, but probably not enough. Now it's a much easier proposition. Also in terms of normalization, if the dollar is the dollar's been rallying because the Fed have been ahead of everybody else in terms of raising interest rates. But the ECB are going to raise interest rates. The Bank of England are going to raise interest rates. So everyone else is going to up their game in terms of interest rates to make the differential between US rates and everywhere else much less. So that's going to weaken the dollar. Now, if the dollar weakens, that has the effect of allowing for more risk taking in the system. And it will also impact the bond yields, which we've already started to see. US bond yields have come off. They've started to move down a little bit. Like, admittedly, it's not massive, but it's enough to take the sting out of this upward trend. We haven't broken this trend line yet, but I think this trend line will break and we'll see a bigger correction, which will help property investors, property owners, which will allow for more speculation in the system. So the dollar weakening is really a function of interest rates. It's a function of the market getting used to rising interest rates. The Fed, I think, are nearly there in terms of what they want to do. They are looking at what's called CPI numbers, which is consumer price inflation. This is consumer price index, which is a measure of inflation. And as everybody's adjusted to this higher number, rein back in spending and all that kind of stuff, this inflation number is not going to look quite so bad. So inevitably, they overshoot. Looks like they probably overshot a little bit. I don't think they mind overshooting because they can always cut rates if they need to. But the market looks ahead of that. And I think they're starting to see the end of the trend. So we are at a very interesting time. The equity market saw it, jumped on it, went, wow, let's go for it. Let's print a low and start rallying aggressively. If this whole scenario is correct, then we've seen the low and all the people who are talking about a crash are wrong. We're not out of the woods, but we could be seeing an extended equity rally into year end. And then that will build us up for a pretty good 2023.
Yeah, it's been nice to see the dollar turn downward because that's been putting so much pressure and sucking money out of equities and crypto and other things. So puts people likely in another risk on situation where a lot of the big money is then going to want to invest in equities and stocks. Well, equities and crypto. And that's what I've been looking forward to. Oh my gosh, for a long time now. If you see, like, it bottomed out actually when crypto had last run, which is April and really like February through May. And look where the dollar was in February through May of last year. And then the dollar has taken off. It's got some inverse correlation to the crypto market. So seeing the dollar start to fall has been very nice. Hopefully it continues to collapse versus other currencies and give some more money back into the crypto space.
Yeah, absolutely. I think that the function of a rising dollar is based upon interest rates going up and people saying, well, look, if I can get guaranteed X amount on my deposits, then why am I investing in risky assets? So the first boom in crypto assets came because bond yields were negative, so you were guaranteed to lose money. So if you had to put your money somewhere, and so people would say, well, look, if I'm going to lose this anyway, I may as well just take some risk. But then as these rates started to go up, that risky money gets taken off the table, and they say, well, look, I can get a return now by just putting it somewhere very safe. And so that's why we've seen this realignment of funds. So the dollar moving up is a function of the Fed saying that they were going to raise interest rates and have done. And I wanted to show you the weekly chart because so the weekly chart up here, whenever you get a major reversal, you should always see it in the weekly chart. So it starts off in the daily chart, and the weekly chart is still showing this green upward trend line. It's not been breached. We've got the moving averages as well, which show you these are long-term moving averages, and they take a long time to swing upwards. But this is an accelerated trend line, but this main trend line is all the way down here. So, it hasn't broken this first trend line. It's broken some very aggressive accelerated trend lines. But that was giving me the signals that we were reaching some form of top. The size of the top usually is determined from now. So we could still see some big swings. So I'm not ruling out another move back up because there are a lot of bulls who are looking to buy the dollar on weakness because that's where they think the trend is. And so we will see this battle playing out in the next few weeks and months. But that's the, in essence, that is the definition of a topping pattern. It's when you get the people who are buying it at the end of the trend, and you get the people who've bought it a long time ago who start to offload their positions, and the market will go sideways and then start to trend down. But in terms of sentiment, given that we were printing very strong numbers for, if you remember, non-farm payrolls was very strong, CPI was very strong, and the dollar has not managed to break a new high. That's why I've pinned that up there. It's hit a high, and then these following weeks, we got really strong data. So my question is, why aren't we through this 114 level if the data's strong? Well, it's when the market gets saturated and they're so used to this bullish information that they stop responding to it. It's becoming less of a story. So that's kind of the beginning of the end of the trend. But I just wanted to warn that whilst on the daily chart, it does look like we've topped, we've made a double top there. And I'd be quite happy with a big move down here because, as you know, I've been looking for a dollar top for a while. I've got to caution that there's still potential for a move back up because it's not being shown on the weekly chart, and we still have got this upward trend line. So I just wanted to put that little caveat in there.
Yeah. So we're not completely out of the woods.
Not
if
yet.
I were to summarize that,
Yeah.
It's looking good. Like maybe we've hit the top, but we don't know for sure. You said there's another meeting next week to determine some things that specifically is the federal interest rate raise, right? Whether the Federal Reserve is going to raise interest rates more.
Yeah, they're going to raise by 75 basis points. That's pretty much guaranteed, but the market knows that. So that's not new information. So once they raise, then it'll be, okay, now what? It's like, so the market knows that.
Expecting that they'll stop raising probably after that is what I'm hearing. Is that what you're hearing as well?
Yeah. Yes. So they're going to, it's going to start to tail off, and the effects of these moves are becoming less impactful. And if they're worried about the CPI numbers, I still believe that the CPI numbers are going to gradually start to look much better. Oil prices are down, food prices are down, people's spending has been adjusted lower. There's been this general fear out there. The property market's probably taken a little bit of a dive. And so there's all this general fear that they're going to have to react to. They can't just keep raising they can keep raising interest rates into that sort of data, but it's very unlikely. We know they're going to respond to that data. We know they're going to respond to the sentiment. And the equity markets are already sort of one step ahead, saying, I don't think they're going to do much more. And so we will see. I mean, and also, didn't we get some really bad data from, what was it, Google, from YouTube? Some bad advertising data. Now, what's happened to? Let's have a look at what's happened to Google. Yeah. So
impacting their stock price, right?
Yeah. So their stock's been coming off quite aggressively. All tech stocks have been coming off quite aggressively. We'll just have a quick look through, see what Apple's doing. See, Apple came down, it's gone back up again. It's quite a nice triangle that could be building up for a new move higher. But Google, there was some bad data on YouTube, advertising stuff, which isn't surprising because there's now quite a lot of competitors that are coming out there. And obviously the pandemic split a lot of people in terms of views, and there's certain things you can't say on YouTube now, and I think people don't like that, quite honestly. I think they like to be able to say what they want to say, but I also respect the fact that you've got to be careful about misinformation and scams and things like that, because when you know about the crypto space, there's plenty of those around as well. So it's a fine balance, really. And but overall, I think that it's when companies are not doing as well, they may rein back in their advertising spend, but actually what they probably should do is spend more, because it can work in their favor. But in any case, I don't think the market's reacted that badly to this data. And the tech sector has been recovering. Remember, look at Netflix. I mean, that was on the floor. That's been going up. Microsoft's had a good bounce. That looks like maybe an inverse head and shoulders is forming there. Tesla's a bit of a difficult one because it's that looks like a massive head and shoulders pattern, but we shall see. Meta, I think, is the most important one in terms of the crypto space, because they are. I think a lot of what they're doing will tie into things like Decentraland and places like that. So that hasn't quite rallied yet. And Nvidia is obviously important in terms of the chip makers. I'd like to see this rally, but this looks like a developing reversal. So I wouldn't be surprised if that's the low and we get quite a major rally here. So more reasons to be positive than negative, I would say, in the summing up. And it should all impact the crypto space. Now, whether it's now, whether it's in a couple of months, I'm not sure. But I do think that these are positive developments that, we're kind of probably a bit ahead of the market, because most people are still really negative and calling a crash.
Yeah. Well, that's usually when the market surprises everyone, right? When most people's sentiment is way down, and then it creeps up and people say, nah, it's just a fluke. And then it keeps going. And then they're like, well, what's that? I don't understand. And that's how that catches so many people asleep. And that's one of the reasons why I dollar cost average it. Specific on one of my videos, I think it was even last week's video of this, you see sometimes in the comments some negative sentiments like dollar cost averaging is a terrible idea because it just keeps falling. Yes. And people like that, they lose hope, they sell out completely, and they miss the ride up. Why? Crypto winter is hard. It's hard to go through this emotionally when you're paying attention every day and you want it to happen now, because it happens on its own time frame. And it's impossible to predict very well. The richest of the rich don't even try. They just generally try to buy low, and they then generally try to sell high, because it's impossible to know, because we don't have magic crystal balls. And so many people don't really get that. They're looking for the magic solution that they can jump in right at the bottom, ride it all the way to the top, and jump out. And there is no freaking magic solution. It is hard work making millions of dollars. Who would have known? And the hard work comes in emotional work. I mean, it's not really extremely hard. You do a lot of research, you try to find good companies, good projects, you try to buy when they're low, and then you wait till they ride up. And that's what it takes. And what I've learned is surprising to me is a lot of people don't have the emotional stability and the patience to let that happen.
Yeah. I mean, I think it's important to mention that when it comes to a general dollar cost averaging strategy, you should be very careful. But those are for people who are trading on leverage, and it's not part of your strategy. And when I teach technical analysis, I've often recounted a story of a guy that I knew who wanted to invest in a particular stock, and it was just one single stock, and that was, first of all, the big error that he made. And he said he was going to buy it for the long term, and he had a certain amount of capital that he wanted to invest. And he bought this stock, and then a couple of months later, they issued a profits warning, which is a very bad sign. And it's a very small company as well. And long story short, he kept buying more and more and more. It wasn't part of his strategy. It was just out of trying to make his money back. And it was out of pure fear. And it was about, all about being obsessed with one single stock and trading with money that he didn't have. So he's making very bad gambling positions, which is very different to a strategic, I'm going to put a small amount of money into something. And if I've done my homework and I think the long-term prospects are good, then I'm going to nibble at certain levels, especially when sentiment's bad. Those are two completely different strategies. But dollar cost averaging went out of fear, out of being at the casino and losing and doubling your position to try and make your money back. That's when it goes terribly wrong. And that's why dollar cost averaging is regarded as a bad strategy when it's not part of your strategy. But when it's part of pure gambling and leverage speculation, because you can't make good decisions when you're under that sort of pressure. But like, for example, Decentraland, for me, I bought some, I got out. It's gone down a lot. I've not really looked at it, but I like it for the long term. So I might start buying some more. I'm not going to start buying it because I want to make my money back that I bought at the top. I'm not really bothered about what happens in the next couple of months. I think this is going to be a sort of 2 or 3 year play. Now, if it starts to accelerate and the technicals look good, I might start loading up. But another strategy is one that you've mentioned before with, say, for example, Drife. I wouldn't have touched that because it was going down so aggressively in a downward trend. But then suddenly, boom, it's up a huge amount. And if you were just nibbling at it, it's on your radar and you see it's gone up and you might want to add more to your position. So I can see it's very much down to what works for you and what works for your mindset. And if you haven't planned it at the weekend when everything's quiet and you're away from the screens, although with crypto, that's another nice thing. The market's never closed. But I always think you should come away from the screen. Don't make any decisions in front of your screen, because it's too tempting to actually just hit the buy or be emotionally involved with it. You got to try and have one step away where you have a cooling off period and think about what you're going to do. But if it's part of your strategy, then it's great. That's basically what value investing is about. It's about picking stocks that might not do very well for quite some time, but over the long term, they will perform extremely well.
Yeah, and specifically dollar cost averaging, you're referring to when people, their position is losing, and so then they dollar cost average in to try to get a better price. And the story that you gave, like he was a stock that he had picked, which was kind of a high risk stock, small company. He just kept buying in, and probably that business then failed, right? And he probably lost everything on that.
Yeah, exactly.
So
it went from 60p, it went to 30p on the first, and then he bought more, and then it went to 15p, and then he bought more, and it went to 7.5p. Then he bought more, then it went to 1p, and he took his biggest position because he said it can't go lower than, and then they went bust. And so that's the thing, increasing your risk as the market's going down is not.
He had no diversification. He went all in on that one, which was a risky one to begin with, because I like investing in risky places, and I use diversity to balance that risk. Yeah. And so, that's why when something is failing like that, I'm not then going to throw all my other positions, like sell them and roll into that one, because it just takes away your diversity. But what I like about the crypto market is generally how volatile it is and how these seasons are so short. And what I mean is from one top to one top historically has been roughly about 4 years. And so that cycle is a short cycle. Like real estate, often from top to top, it can be like 12 years or 16 years. So very, very long cycles. With crypto, generally, when prices are way down and people are running away from Bitcoin, that's when I like to dollar cost average in positions that I like. And so I do invest in the riskier positions. I don't even hold hardly any Bitcoin, hardly any ETH. I'm in the riskier ones, and I use diversification to balance out the risk, because some of those are not only going to fail, they will fail. And I've had several of them fail, and that's built into the strategy, because some of the ones that will survive will go 50, 80, 100x, 200x. And so it'll make up for the some that lose. And so for me, dollar cost averaging is, while things are cheap, just generally buying as much as I can, right? Just putting in, like back last crypto winter, which was great for me when things were terrible and the crypto winter was boring. Just every paycheck, I just put more in. I diversified across a number of things and put more in. And then when the market turned around, I had some really good positions that did incredibly well. And so same thing this crypto winter, that diversification, dollar cost averaging in, and then take the ride up when it finally does come, take some profits out and repeat the process. Although Paul has a very specific, and what I love is Paul trades the charts, right? So, and Paul, like when I say some of these things, it's like adverse to his strategy, because he's looking for specific indicators. He's not going to take the ride all the way from the bottom, because at the bottom, you can't tell if it's the bottom. He takes the ride after it's hit the bottom and it starts going up. And the advantage Paul has is he can trade any of the markets, because if you're to wait for that specific point in crypto, and that point is very short, you'd be sitting on your hands for all but 2 months out of a 4 or 5 year cycle in crypto. But if you have 7 markets that you can invest in, or 70 markets that you can invest in, you can keep looking around and often find many markets that you can trade that window. Would that be a fair summary?
Yeah, absolutely. It's sometimes difficult to explain what I like, but sometimes you get a sense. Sometimes it's everything moving together, like the Dow bottoming, the dollar moving down, and yields moving. You just get this sense that there's going to be this big move. It's also reading sentiment and stuff like that. But with, like you say, with the altcoins, there's very little information, but I'm kind of used to that with charts, because I don't have any other information other than the kind of macro position and what the charts look like. And unless the charts look good, it doesn't really matter what the macro position is. I mean, I could be in a room without any news, cut off from the rest of the world, and I'd still be happy to look at the markets and, trade or advise based on what I'm seeing. So, but built into that strategy means that I will not get the bottom and I will not get the top, and I will be chasing something that other people have already got into and seen the bottom before me. So that's kind of like something I accept, and I don't mind that.
Yeah.
But I'm also trying to pick not what goes up or down week to week, although that's part of it, because people want that and they want a weekly update, etc. But I'm trying to look at the trends that will last for months, possibly years, but definitely sort of over a quarter, and possibly longer. And those are the moves that are more interesting. We saw the top in the bond market. We saw the low in the dollar. And that's been a really good trend. So when you pick up on that first phase, it's and we've got to go through one of those together, where you see a low and then you see how far the market goes, and it's having the confidence to stay in there when a lot of the time there'll be turbulence along the way. There'll be reasons that might make you want to get out, but actually that trend will stay. And it's only at the end of the trend where, like you say, in the property market, everything becomes very contrary. Everybody's in there and saying how great it is. And we've just had that with the US dollar. So, so it's part markets, part psychology, part intermarket analysis. But the nice thing is, yes, we can look at everything, and you sometimes get a clue about what's going on from something that's outside the realm of the main market that you're looking at. So, for example, we want to look at XRP this week, no, maybe you didn't actually. You put Cardano.
We can look at XRP because they, I think something's going on there. So
yeah, we look. I sort of put XRP up. Is this it? This might be it. Yeah, XRP. I looked at XRP a little. I don't think it was last week. I think it was 2 weeks ago, and I put it up for the reason that it had made this low, was sort of doing a similar thing to Bitcoin in terms of sort of bumping along the bottom, and then they had this massive rally, and I was like, wow, why has it done that? I know there's obviously legal issues going on with it, etc., but that told me that there was risk coming in all of a sudden. And then Cardano, which you've asked about, and for this week, so somebody's asked for an update. If I just put this on a log scale, it's done something similar. I mean, this triangular constriction was a very good pattern. So we did call the breakdown here, but I think we also said that it would most likely go down and then have this very sharp rally up and try and negate it, which is exactly what it's doing now. So I think that's quite fascinating for me, that some other markets give you a tip off that risk on is coming in. And so usually there's this kind of rotation where a few move and some don't. You think, oh, okay, why haven't they moved? And then suddenly they move. So it's almost like dominoes toppling. They don't all go at once. They go in waves. So this is a really interesting chart. I like the way it's come out of this triangular constriction, but this is a very impulsive bullish move. This looks sharp, like people are picking it up because they're seeing a bargain. Now, one rally doesn't make a bull market, but it's taking it back into this territory where it broke down from, where technically one would have shorted it here. And now we're not looking at very much of a profit from a bearish perspective. So I think the bears would be looking to cover their shorts there. or if not here, very, very soon. If it can get back over 0.45, 45 cents, I would like that. I want it to be back into this zone and breaking the high. And if we could jump into Ethereum, you can see how we were talking about this sideways move. It was going to break down, and then it went back into the range again last week. And we said that it would, because it hadn't gone down, it rejected that downside move. Then there was a greater chance of a rally. And the first sort of sign would be the break of this resistance. So it's interesting that we've had such a sharp move. You might say it's because of Rishi Sunak. Maybe it's because of other things. I don't know really. I just think the market was possibly a bit short, and the shorts were stale, and they had to cover them. Now, again, that doesn't make a full bull market, but it's actually looking a hell of a lot better than it was last week. And if we can start to get back up over this 1720 level, which has been absolutely pivotal, then this is going to start to look, much better. And I think to complete a double bottom, it's got to go all the way over 2000 and sort of 2030. But if it does that, we'll be looking at a move back to 5000. So, we're not out of the woods. This is just a short-term rally, but it's a very sharp short-term rally that's mirrored by risk on in the equity markets. So there is the possibility that this is the low, as well as what we were saying about the dollar. It's possible that it's the high, but we can't say absolutely for sure because a few more things have got to come into play. So Bitcoin's started a rally, and I think it's going to head back up to this 21,868 level. That's the first level of resistance. It may get as far as like 2,400. I think there'll be a lot of people who are long by then who might be, I think it's a short-term market. I think short-term traders are trading it, and they might be taking profits there. So the big breakout level for me is around 25,000. That will confirm a base, but it's broken this downward trend line, which is a very good sign. And it's moving away from the danger zone, which is this area, which is close to the prior low. Because if we switch over to a weekly chart, the fear was that if it takes out this low here, it's going to go towards the next Fibonacci level, which is 14,715, or this resistance point from this first move up here, which is around 13,880. So if this does eventually break down, this is for me the critical sort of buy zone. I'd be very tempted to buy in that zone with some very tight risk or stops. Now, again, I'm not saying that's where it's going to go. I'm not saying for sure. I'm just saying that there's a possibility that it could trade down there. And if it does, I would see it as a long-term opportunity.
Yeah. It's crazy where this is all going. It's exciting to be part of this. A lot of people get lost in the minutia of how long these events take to roll out. I remember I had my first job at 8 years old, and I sold donuts to businesses during the summer.
Oh, wow.
And I would carry around some baskets, and I'd go in. I remember going into this software shop, and I was curious, I was like, what is software? And so the guy explained it to me. And, and he's like, stock tip, buy this company, Microsoft. And I didn't know what the heck that was, right? And, over the next 10 years, that would have made me incredible amounts of money. But that took 10 years, and I was 8 years old at the time, right?
Yeah, right.
How do I buy Microsoft at 8 years old? So some people get so impatient for this to play out. Let it play out. That's why this strategy includes a lot of patience, and we're in the doldrums of the crypto winter where the frustration gets high, and I'm feeling that frustration high again from a lot of audience members, or maybe they're just people that tune in once or for a video very occasionally, so they haven't really understood the whole methodology of how to make this play out to your advantage. So let's take a look at some of the other viewer suggestions. We reviewed Cardano. We also had to look at Glimmer, Adax, and Wanchain, as well as a comment I missed actually from a lifelong friend. He wants us to look at Chainlink.
Okay.
So let's take a look, if we could, at Adax, because it's actually within the Cardano network, and then we'll jump over to Glimmer.
Okay.
Adax we might have to look at on something else. In fact, it might only be on Nomics.
Okay. Let's see if I can get it on TradingView. Crypto Adax. No, that doesn't look like it is. Try again.
Found it here on Nomics. That's what I'm looking at, but it's not going to be the type of chart you like to look at. Though you can switch it to bars.
Yeah, I'll give it a go. So yeah, so to your point about people are being frustrated and stuff, it's understandable, and because the markets have been going down or sideways for quite some time, and that's the nature of the game. And if you're trying to make money out of a falling market, it's very hard to do, and unless you've got very long-term time horizons. But those same people, if they're out of the market now, when there is a big rally, they might come back near the end of it, so when it's too late as well. So sentiment is an important part of it, and understanding that your emotions form part of how the market operates is also very important. And I'll just say one final thing is that I think anybody who does anything in the markets always has to take responsibility for themselves. It's like I don't blame anyone for what I do. If I make a mistake or if I lose money on something, even if it's been a tip, it's my decision to take it. It's nobody else's. And I'm not saying that anybody should do anything that I say. I think you should do what you think always. I'm just telling you what I think of the market. So, but I can understand the frustration. It's but there will be good times ahead. And the problem is, if you're not here now, then there's a chance that you'll be out of it and not looking at it when things are going well, and you'll miss the bulk of the moves. You have to turn up, as they say. So all of this data, I'm trying to get it on a log scale so I could just get a bit more information or a different type of chart. So we get a bar chart. I actually quite like these charts. They're quite nice. Oh, I see. That's part of TradingView. So I wonder why I haven't got the data. I should have the data for everything.
I know, right? It's pulling it from TradingView, but we can't find it through TradingView directly.
Yeah, I've got I paid for all the data, so I'm not sure why that's the case. But anyway, so this is one of those kind of simple ones, really, because although the rate at which the downward trend has slowed, it's still in a downward trend. So I can't say that this is a buy as yet. It's definitely a wait for me. I seem to have some recollection of looking at it at one point, but I just can't remember.
It's been a long time. Yeah,
it's been a long time. Yeah, there was evidence of some form of base here, very small one. It was trying, but that failed, and it's failed again. We had a strong rally, which again it couldn't hang on to. It's still printing kind of lower highs, but the way I would look at this, if this is a particularly interesting project to you, given that there are some signs of life in the rest of the crypto market, I would see whether this responds in the next sort of 2 weeks or so. 2 weeks, I think, would be a fair enough time for it to have rotated, or people to have rotated into things that aren't moving or haven't moved as yet. And so if it hasn't moved up aggressively by then, I would start to worry a little bit about it. But in pure technical terms, I think this 5 cents area just here, that for me would be the base. So I'd need that to break. The reason why it's there is because that's the closest, most important local resistance point, and it would also complete a base, like a double bottom or something of that kind. So I need a basing technical pattern to turn bullish on this, and that's where it would be. So but it's one of those ones that's now kind of low enough to put in a small amount of money that you can afford to lose if it's a very interesting long-term project. So so what does it do? What do you think of it?
Well, so this is one that some audience members and myself made a fortune on, but with everything, it was timing based. So let me share my screen. So they had so they allowed people to buy in their pre-sale, and at the pre-sale you could buy it at like 20 cents. It then came out on the market, dropped all the way to about 10 cents, and then it skyrocketed all the way to $2.40. So I sold a lot of my stuff in here. Unfortunately, I only sold a little bit way up at this spike that took off and went crazy. I don't think I had it. My stuff was locked up for 3 months from when they launched, so I don't even think it was available when it was here. And so a lot of my viewers, like, we got in here and took this right up and then took profits out. So is it a good entry zone again? It might be. I haven't kept up with the team on where they're at. Obviously, it's this declining or falling market here. I'm just looking at the website, and it looks like they do have their swap up. You have to connect it to a wallet. I don't have a wallet installed on this computer for this, but like, it looks like some pools are up. They have some trading. So the Adax pool, there's a lot of volume there, a little bit on the ADAO, a little bit on the ADA and MELD pool and World Mobile Token. So it looks like they have some trading going on and it's working. I haven't heard from anyone how is going on that. There are now Adax was one of the first Cardano swap projects to announce and to launch. Since then, a lot of other ones have come out, and some other ones are working very well. So even though they were first to announce, I think they were slow in their development and their rollout, and so they might have lost some market share to some competitors. So would I buy more in? Possibly. I would have to get updated more on where they are to figure out, and obviously somebody's following them pretty closely. That's probably why they suggest it. They might have some good insight on to what they like about it now, but it is getting really cheap again. Yeah, so that's where we are with ADAX. For me, it's just a wait. So yeah, I don't like the declining movement like this, though the velocity of the decline is slowing down. What we saw with Drife actually looked just like this. We looked at Drife last week, and then all of a sudden it didn't, right? So all of a sudden it popped around, which is almost impossible to time those kind of moves. So it was declining like this, and still almost hitting lower lows, and then boom, popped right up. And that's interesting where it's at. Have you looked at it lately? This is the kind of trading pattern that Drife has been on. It came up, hit this peak, but look at this wedge that it's trading in.
Yeah, I haven't looked at it since last week or 2 weeks ago.
We jump over and look at that if you could pull it up, just because I'd like to get your insights on what you think about the trading pattern.
Yeah. So what looks good about this is it looks like a triangular constriction, which is usually the start of another bullish move. So this is very interesting. So I thought what might happen is it would hit this resistance because everything else was still a little bit cautious. I thought we might get a pullback and then a move up. But what's happened is, as I say, this has gone into a triangular constriction, which is a bullish pattern. And so, sorry, that just lagged as I was drawing it. So we've got here is, so this is a buy still. So if it stays within here, it should then break out and take this high out and then move up again. Now, this is a continuation pattern, and continuation patterns usually complete very quickly. So if it's still in this zone in 2 weeks' time, then this pattern has failed. So it would normally move within a few days. So I would say by next week, we would have resolution to this pattern. And it'll either be upwards, which will be following this trend, or it will break this lower line and it'll form more of a consolidation. If it does come back, we should find support around this level, this 0.0015. So kind of 1.5 cents area. but this is interesting. This is like, it looks like the beginning of a bull trend. So much more exciting than it was before. And if we look at the power of the moves, they're much more aggressive. So you can see when it was trying to move up here, it was far more muted in its move. There wasn't the power that we've got here, which is like, there's definitely some strong interest. So even if this does fail, I think there'll be people waiting to buy it on a pullback. And by fail, I mean this pattern fail, which means that it should, by its sort of very nature, mean another sharp move up, which is a big ask given it's already moved up quite a lot and the rest of the market is kind of slowly moving higher. But allowing for pullbacks, it should hold above this 1.5 cents area. And I'd say support for it will remain until it goes to this level here, which is where the prior support is. But if it gets below this line, then I'll put that horizontal line in. I always like a bailout level because, like I say, you never know when, or for me, I never know when I'm wrong and when it's time to get out because I don't look at the fundamentals. So I need a technical level. This for me is the kind of Rubicon level. If it goes through there, then that's it. It's sort of, it's not worked and we have to look at something else.
Thank you. Let's jump over. So this is a buy for you, but a cautious buy because it could still break down out of this pattern. But usually in this constriction pattern, what is it, like a 2/3 chance it'll break to the upside and 1/3 chance it'll break down?
Yeah, it's kind of 60-40, you could even say 75%. That it will move higher, but when you liked it before, I liked it from the breakout. So it was a buy from this breakout point. It was just a question of whether it was going to pull back. So it's already moved from there. It's just that now the question here is what is going on? Is this just a short-term rally, or is this going to be the beginning of a much bigger trend? And it looks like it's the beginning of a much bigger trend, but even bigger trends have pullback. So this is why I've got to allow for a retracement. So from before, if I can just explain the psychology of how I would look at it technically, over here I'd be sort of waiting and saying, okay, let's wait, let's see what goes on. When we had this sharp move, this is like a wake-up call that something's happening, and you can't just sit around and take your eye off the ball. You've got to either bought it or have a strategy because it's moving quickly now. So you've got to make quick decisions here. Otherwise, it could be all the way up here, at 3.5 cents, and you'll be thinking, okay, should I buy it? And then your risk reward starts to drop quite a lot, because risk reward for me is where I buy it and where I put my stop. So I could buy it here with a stop below here. But if I buy it at this level with a stop below here, then I'm risking far more and I'm getting far more late into the party, as it were. So this type of constriction is usually a sign that the market is going to move higher.
I'm trying to see, I'm looking through their Telegram to see if I can find something that may have kicked off that move, something on the fundamentals.
Yeah.
It looks like there is a news article on the 20th of October. Auto unions are new entrants to ride-hailing biz as Bengaluru looks to Ola Uber alternatives. In other words, it looks like the operations of Ola, Uber, and Rapido were earlier suspended after they were found to charge a higher base price. So maybe the government of India, because part of their operations, the founder is from India, and so part of their operations are in that world. So sometimes it's hard to get the news because some of it's not in English. And so it looks like that kind of favored them, as it kind of put some restrictions on their much bigger competitors that might have favored the growth of Drife. So would love to see this take off and create even more competition across the world for ride sharing, right? There's a few main competitors in every country that kind of have a lockdown, Would love to see Drife go completely international and create good competition there and lower fares for people to ride, while providing a higher amount that the drivers get to keep.
I mean, a smart thing for the Indian government to do would be to support an Indian company like this. If they can turn it into a global player, then how fantastic would that be?
That would be great. And had the CEO on a couple of times. I really, really like her. She seems very intelligent, straightforward, honest. Yeah, I liked her a lot. I really hope this company survives and does well. You know, it's a long road between here and being as big as Uber, and hopefully they make it there. Let's take a look over at Glimmer. We haven't looked at Glimmer. It's been a good month, I think.
Okay. Oh, right. That's Moonbeam.
Moonbeam. Yep.
Yeah. Right. I've got a feeling that's not going to be updated. Oh, no, it is. Okay, great. Super. So, right. What's going on here? Well, the market looks like it's trying to base out. So this is one of those situations where you say, do you buy now before it's moved, or do you wait for the breakout? Cautiously, I would say wait for the breakout, but this is forming potentially an inverse head and shoulders. It's a little bit compressed. It's a little bit more compressed than I would like, because when it's this compressed, it's a kind of toss up between whether it's an inverse head and shoulders or a triangular constriction. A triangular constriction would be bearish and would mean the market would move down. An inverse head and shoulders is bullish. Now, the reason why it's slightly on the edge of this, and why I prefer the inverse head and shoulders, is because this is I'm creating the triangle from this point here, which is more within the right shoulder. And what that means is that the market's made a low, it's rallied, it's made another more pronounced low, it's rallied, it's made another sort of low that doesn't get lower than the previous low, which is ticking the boxes for what an inverse head and shoulders should be. The final part of that is a strong rally that takes you through this neckline. A triangular constriction is far more compression and less volatility within two sort of lines that would be more like this over the period of the whole pattern. And I can't really draw that correctly without kind of breaking some of the price action, which is, you know, not really allowed. It's valid price action. So why would I draw a line through it? I've got to respect it. So I think this looks interesting. If I put my speculative hat on, I would say it's a buy. And but it's still kind of 60-40 here because of it's within this basing pattern. But I'd be willing to give it a go with a stop below this area here, so below sort of 43 cents. Now, the reason why I would use that is because it's been bought here, it's been bought here again and again, so it's been bought a few times, and then it's bounced close to that area as well. So I know that there's some interest every time the market gets there. If it breaks below that, then of course something's changed psychologically, and that's what markets are about. So I would bail out if the buyers aren't willing to get in and hold the position through sort of 42, 43 cents. So I would say it's a buy at 48 with a stop below 42 for me. Looking for a break of this line. And as I say, if I was to be more cautious, I would wait for it to actually go through it to complete the pattern, because it's not completed as yet. It just looks like it's in the final stages. Could still be a couple of weeks away, but it could also be very close to, you know, it could do it tomorrow for all I know. So yeah, it's interesting. It's a good one to look at. Thanks for reminding us about it.
Yeah, it's getting to a point where I really like where it's at. So I'm looking at Coin Market Cap, and their market cap right now is at 206 million with a fully diluted market cap of 506 million. Now, it's in the Polkadot ecosystem, which has been struggling for over a year now. Gosh, close to like a year and 5 months or a year and a half. And big update happened with the Polkadot ecosystem is Gavin Woods resigned as CEO. And you might think that that's bad news. Like, oh, Gavin Woods is a brilliant innovator. But sometimes the skills it takes to be a brilliant innovator are not the same skill set it takes to be a CEO. So I think he was smart to do that, so he can help fill that position with somebody who is really good at driving things forward. And so I think that's a positive for the Polkadot ecosystem. What I've learned is too is things go in waves, right? Even these layer 3 blockchains, or not layer 3 blockchains, these third generation blockchains, they go in waves, and the whole Polkadot ecosystem has been way down. And so now, it's at these abysmal lows. It was once $14. It's currently less than 50 cents. It's starting to be really, really attractive. And I see how there's this nice, pretty flat bottom. That doesn't mean it can't go down more. It just tells us we're likely somewhere near the bottom. And for me, that's a buy signal. I like it like that. I think Moonbeam is a good project with a high likelihood to succeed. The market cap is higher than a lot of the risky stuff that I'm in, but this is a good project. It's less risk than some of the stuff I am often in, but I do have many projects that are in this risk category, and I do have a little bit of Moonbeam. So yeah, I like this one for the long term, and I like the price it's at. For me, it's a buy, just based on my methodology, which is buy near the bottom, even if you don't know for sure it is the bottom, because how would you freaking know? And then I have patience till money comes back in the crypto market. Hopefully the project survives till then. And then I sell as it goes crazy later on. Let's take a look over at Wanchain. Now, Wanchain is a strategic partner with us, as I said earlier, and they've been good to us. I really like them. I love their team. They do have some of the smartest people, in my opinion, in the blockchain space, doing a very hard thing, which is trusted or trustless cross-chain bridges, and the technology that's going to help connect all the different networks up together. They haven't got a lot of they've had a lot of news and releases. They haven't had a lot of spotlight on them. That's okay. One of my greatest investments, or one of my investments that did spectacular, and had I not sold so early, it literally would have done like a 4,000x. It also had some things that I often see with Wanchain in that investment. That was Axie Infinity. It got very little news, very little coverage, till even though they were developing and doing some really cool things, until all of a sudden it got lots of news and lots of coverage. And so Wanchain has been a long time in my portfolio. I waited till the bear market and I loaded up on this about 3 years ago, and I've added to my position over time.
Yeah, I mean, we had this potential reversal at this point here, which the big level was and still is 25 cents, which has acted as a bit of a barrier. And what I like about this is obviously it's still in this potential reversal pattern phase. Now, I'm looking at some similar markets that have done this, got near its low, maybe even broken the low, and then had a sharp rally back up. That's what I really need to see here. It's going to have to be a wait for me, but given that there are some other more speculative projects that are sort of coming into life and rallying, I think this could do the same. Now, I'd feel much better, as I say, if it gets through 25 cents. But as long as we can see it hold this 15 cents area, which is the major low, then I might be tempted to have a little nibble at these levels, on the basis that even if it's range bound, it's close to the low of this range, and it's going to sort of bounce up to the top of the range at worst, and at best it could actually, break through and form a base and be trending much higher. So for me, it's a wait. With a speculative hat on, I'd nibble at it a little bit and buy some. Where I would get slightly concerned is if it closes below this 15 cents on a kind of 1 week basis. I mean, a quick little break and then move back up, I would say, is just a bit of market noise. But if it closes below 15 cents and stays there, then unfortunately, I think it's going to have a further down leg, which could well be a great longer term buying opportunity. But for me, it would be I'd have to wait longer before getting more excited about it. But it's been consolidating for a while, which is what a lot of the other markets have done, and the majors consolidated and then suddenly rallied. So this is why I'm not immediately saying it's a sell. I like the idea of actually trying to find somewhere to pick it up and use this as support, because recent supports have held and worked. And there's no particularly clear bearish pattern as yet, but other than this good support level holding, and then if that doesn't hold, that would be the inverse in the sell signal. So be interesting to see. I was just going to draw in a downward trend line, because I think from a longer term perspective, this really needs to break before we can start talking about a multi-month rally. So this is why I'm a little more cautious about, just loading up and saying, right, this is the time. If this trend line, if this 25 cents breaks, by the time it does it probably would have broken this line too, which would be two things that would be extremely positive. And I don't mind waiting for that, because if that does happen, then from a long-term perspective, we could be heading all the way back up to all-time highs. So, or certainly this resistance high, which is still a long enough way for it to be interesting. So, yeah, so we shall see. But that's it's good to keep an eye on this one. So thanks for suggesting it again.
Yeah. Cool. We've had the CEO come on. We've had one of their chief scientists come on, which is world renowned for his work on the blockchain and blockchain innovation. And so I'm excited to see this one at some point come back into the limelight and where the price could go. It's way down. Let me share some fundamentals that I like about it. First of all, their market cap's all the way back down to 35 million. That's in a juicy range for me.
Oh, that's tiny, right?
Its previous high went all the way to $10. Of course, that was shortly after it released, and it was one of the hottest ICOs back when it launched, or one of the hottest projects when it first launched. I'll just say that. And so it went all the way to $10. It came down in the lows, which is where I was buying it, in this 20-cent range. It then went all the way to 240, and has since retraced and been bouncing around that 20 cents price range. It did go even lower during the bear market. The very bottom, it hit 10 cents. So it's right near where the lows were of the last crypto winter. And so, this is a price range I like. I just wish I had millions more to just buy up, across 100 different projects, buy these lows, and then just patiently wait till the market corrects and turns around and buy. So I like the stuff in the market caps below 100 million, that I like the teams and I like the narratives that they're working in. And then it's just waiting till the market turns around. So
Yeah,
that's my thoughts on Wanchain. Do you mind if for me, it's a buy this price. Do you mind if we jump over to Chainlink?
Yeah, sure. Yeah, let's do that. So obviously, like the fundamentals and just sort of holding it for the long term, this should be one that rotates back up when sort of risk goes back into the market. So it's going to be definitely an interesting one to watch. That's for sure. Right. So Chainlink, I think we're going to have to try a few to see which one it might be. No, it's not that one. I know it's the right code, but it's just not updating. Actually, that's it. We got it here. Okay, right. So what's going on with excuse me, with Chainlink? It is in a consolidation still, and this is getting a tighter and tighter consolidation. So that tells us that this is going to be ready to move out and break out, and volatility will jump, possibly within the next couple of weeks, but it could be sooner. So if we look at these highs and how they're compressing, the rest of the market has been doing that and then broken out. So if it's going to follow the Cardano trend, it will break lower, and then everyone will get short or bail out, and then it's going to have a sharp rally back up and then back into this zone. If it's not, if we don't get that kind of breakdown, and it's not clear at this stage what it's going to do, we could just see it just suddenly sort of spike up and go for a base. Now, the fact that we've got two levels of support, or I should say resistance, at the same area around 9 is intriguing, because when that happens, to me, that acts like a magnet to the market, because if we can get through there, it will open up the upside. Now, whether this is, you could say that this started out to be an inverse head and shoulders. We've got a left shoulder, we've got a head, we had the start of a right shoulder. This is one of the reasons why discipline says you should really wait for it to break before getting in, because sometimes it doesn't complete. And the advantages of buying it before it completes is obviously you get in at a good level, but if you wait for it to complete, you're buying it at a worse level. So it's really whatever strategy you prefer and what you can live with, as it were. So the inverse head and shoulders pattern failed there, but I would say if it can get back into this zone over $8 and trade around here, then the market will start to think about a breach of this resistance point. And given that we're in a risk on scenario, out of the two, I'd say that that's the one that I'd favor more. I'd like the idea of it going back up to this area here and drawing in some buyers and then punching through this resistance point, which would give us a fairly nice rally, possibly towards 12, but I couldn't say whether it would go beyond there. Where it all goes wrong, obviously, is if it takes this low out and then stays down. I don't want to see it break this low at $5 at all. I think at least if it does, you've got good support that comes in from this breakout. See, that was the resistance, and then this tiny little pennant pattern was the start of this massive move here. So if it does come down, you really have to be thinking about this from a long-term perspective. That around this area would be the next kind of buy zone or attempted buy zone, with again stops below sort of 370 as a stop area. So yeah, this is an interesting one. This is definitely an interesting one. It needs to do a little bit more work before it looks bullish here. It is in this consolidation, but you can just sense that volatility is going to pick up. And I'm going to favor the upside for now, but I'm expecting it to move sharply relatively soon.
Okay, so this is a wait for you or a buy?
I'm going to say it's a wait. I mean, but it's sort of on the edge. It's a very speculative buy here, which I always try to be cautious and err on the side of caution. So I would like to see it in this area here for it to be a buy, because then it's getting closer to what I prefer to be the buy trigger, which is this $9 area. And it's still close enough to support. There's two elements about it being close to support. A, if it's close to support, then it shouldn't go much lower. But B, if it is close to support, it doesn't take much for it to break it. And it only takes one day to go sharply through there. And all of a sudden, the chart looks completely different. And I think we'll get that decision relatively soon. But given that everything else has been rallying, I think there's more. I'd like to be on the slightly more positive side and say, rather than breaking this and going down, I think it will just edge up, and then we might get a more aggressive move through this resistance point, which I would prefer to happen. But I would be willing to wait a little bit longer until it's confirmed that it wants to do that before just jumping in at this point here.
Specifically, QE Infinity, which is actually a lifelong friend. We used to work at Accenture many years ago together. He's the one that suggested this. I want to read his comments.
Okay.
As one of the major blue chip alts, I think it could be one of the early indicators the market is turning if this breaks, essentially, if it breaks to the upside. So, yeah, good suggestion. Thank you for that. I also want to give some shout outs. I want to shout out to XRP, even though I don't hold any XRP. Very grateful for the battle that they've been fighting against the current Securities and Exchange Commission. And I think they've done the whole crypto space a huge favor. They could have just paid the fine and moved on. They did not, and they chose to do us all a favor and kind of stop the push by, it seems like the SEC is determined to try to hold back cryptocurrency in favor of a central bank digital currency. And so they're trying to keep the genie in the bottle until they can roll out a central bank digital currency. At least the chairman of the SEC, that seems like his direction, with some political allies like Janet Yellen. And so that's been a huge favor to the whole crypto community. I wanted to shout out BitBoy for taking on Sam Bankman-Fried and some things that have come to light about FTX and Sam Bankman-Fried. So BitBoy, good job. Really grew a lot of additional respect for you with that. And the community members for sticking around. There's been some hard times. One of the projects that we've been following, we covered actually last week, and that is Freeway Token. They froze all withdrawals from their app, and so you couldn't withdraw your funds, or essentially they froze what they call buybacks of their superchargers, which is another way of just freezing the withdrawals. They said they had a critical error in their algorithms, and their algorithm lost a lot of money. It's the one that I talked about that was doing 43% returns. And so their token related to them, crashed down 80% in the last just few days, and a lot of concerns, right? So when I invest across a lot of projects, and sometimes individual projects fail. Now, this one hasn't failed, but that was not good news. And it indicates some very bad news that the chance of failure is way, way higher. And so therefore the price of the token tanked. That is part of the system. And that's why I talk about, I invest in the simple analogy over across 10 projects that are higher risk. And the way I do it is that even if 5 of them failed, still make really good returns. But this is why we use diversity to make up for the higher levels of risk that some of these projects are. And Freeway Token may eventually make it. Some of the stuff that they've released, it makes sense as to why they took the actions they did. We can't say for certain, seeing behind the scenes, if everything is true and correct according to as they've said it. But it does make sense. A recent thing that they said that their algorithm all of a sudden incurred a whole bunch of bigger losses beyond what it's supposed to be able to do, and they had to shut it off, and that they lost a bunch of funds, and so that's why they froze withdrawals. That would make sense. I could see that happening. So it's a plausible thing that came out, but we just don't know because we can't see really behind the scenes. The team has been good in communicating to me. At least one of the team members, Matthew, has communicated to myself and several other community members that have reached out to him, and we've appreciated that. But this is the crypto space. Many of these projects, some of them are going to fail, especially during these crypto winters. Very little fails when the market is going up tremendously. But during this crypto winter, some of these risky projects will fail. And so that's why I diversify across a number of them, because I don't need every project to survive in order to do well, because some of the ones that do survive will do much, much higher multiples. So that's my strategy, but it can be frustrating, and it feels like a punch in the gut. As I said, if you haven't subscribed to the Telegram channel, for the viewers out there, subscribe. It's free. The Telegram link is below for the Crypto Rain Telegram channel. We do kick out, the bots, and we kick out people who are just doing stupid things in there, but it is free. The Patreon will give you access to the private Discord that is not free. That is specifically has a gate on it to keep out people that aren't interested. It's only $20 a month for the basic level, but what I find is that's a quality control mechanism, because people that won't pay $20 a month, they usually aren't serious anyway. So that community is great, and I interact with them pretty frequently, and we put out pretty frequent updates on this whole thing, because I don't release a video every day. That helps me be able to interact quickly with the community as these kind of things like that crash come up. Paul, thank you so much for your time and for joining us and your insights. It is good news that the dollar is finally looking like it might be ready to break much, much lower. It's broken a little bit lower, but like you said, not necessarily out of the pattern yet. We'll keep an eye on it.
Absolutely. It's always a pleasure. Thanks for your picks, and I'll see you next time.
All right. I know it sucks, and it's like a punch in the gut when the market is down and then some projects fail, or in this case, it hasn't yet failed. That is just part of the system. I choose to be in the higher risk stuff, and I use diversity to make up for it. And hopefully Freeway Token does not fail, but it could. And I've even talked about in the past that the risk on this project is pretty darn high, and it is. I don't want them to fail. I hope they don't, but if they do, diversity is what balances that out. The crypto market is still slow. It does feel like the crypto winter. You see a lot of people wash out. You're seeing exceptional amounts of FUD by a number of people on Cardano, on everything. This is what the bottom felt like last time, and this is normal. And what's funny is I get all this FUD comments sometimes on my YouTube videos from people who don't regularly watch the channel, and they jump in and they think that they're an expert, and they're like, oh, and crypto is dead and Cardano is dead, and they don't realize how common those types of statements are at the bottom, and they think they're being original, that they have it all figured out, and they're just new, and they don't know what they're talking about. And it's funny because I see that, and I thank them for their comments, because that reinforces that we're exactly in the market where I think that we are, because those are typically the things we see at and near the bottom. This wrap, you know what it's all about. Reinforces the principle I share that make all the difference in higher returns with some patience. Buying low so that you can sell high. And it literally is that simple. But even though it's simple, doesn't mean it's easy to do.
Came into the space chasing all of the gains, chasing the pumps and all of the hype trains. But like in life, shit right before you could. Was told to buy when it was pouring like a rainmaker should. I buy when it's down, don't chase the boats that I miss. Cause I always make the time in mind. I stick the one out cause I'm patient like that, and I'll wait for the right time. I sell when it's high, I buy when it's low. They call me rich, they call me smart. I'm just a rainmaker running the show. Calculated investments, I don't lead with my heart. Principles are simple, they're leaving a mark. Buy when it's boring, just gotta be smart. I sell when it's hype, like all the channels they pump it. That's when I was selling, got parabolic and dump it. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love, and I follow what I learn, not relying on luck. Time is never better, but time like the present. The next 5 years is a gift and it's feeling like heaven. I'm committed to learn, to study and to know that nothing comes easy, but with knowledge the game show. Sticking out this wrong cause soon will come a bear market. Learning and growing, and when it's slow will be the target. Naysayers come out, Bitcoin is dead. The massive decreases can get to your head. Sticking around, the time is better. Strong like that, I'll let the others be fretters. 2 years time the ball will bring back the gains. That makes it worth the effort cause here comes the rain. So let's go rainmakers, let's make it all happen. Let go of the hate, let the haters be crapping. I'm here for 5 years, let's do this together. The time is right, the time could be better. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love, and I'll follow what I learn, not relying on luck. Haters be hating, but time to slow down. Addressing what they say when I'm wearing my crown. They're chasing green candles like someone who was new. I got a vision that was bigger, helping me to push through. I'm still human and sometimes it is rough, and that's what makes me special, simply I stay tough. Cause I'm a rainmaker, investments I love, and I follow what I learn, not relying on luck.